What's behind the golden credit crunch? Hello and welcome to today's Daily Blitz. Now in today's video I'd just like to go over an interesting phenomenon we have seen recently where gold is viewed normally as a safe haven. However, despite all of the interesting and quite explosive market rout we've had over the last couple of weeks, gold is not performing as you might expect it should. It is not rocketing up despite all of the turmoil elsewhere. Instead, it is staying relatively stable amidst all of the chaos. And interestingly, even though the Bank of England yesterday did an emergency double rate cut, so down by 0.5% in interest rates for all of the banking system in the UK, gold did not explode as it normally does on such a decision. And I'd like to explore exactly why that really is. Right now, the global financial system is experiencing something of a credit crunch, or something of a liquidity crisis. It's quite small scale to begin with, but it's become really quite prevalent across multiple asset classes. So just to see how prevalent this credit crunch is, this is a chart which shows the day-to-day performance of a portfolio which has both US stocks and US bonds in it. And US stocks and US bonds together are supposedly meant to hedge each other out. So in times of crisis, people go to bonds, and then when times are good, people enjoy their stock returns. However, interestingly, yesterday was the worst day on record for having such a portfolio, worse even than any day during the 2008 financial crisis. And it all comes down to this credit crunch, this liquidity-driven lack of money in the market that is causing people to sell both stocks and bonds and gold all at the same time. A lot of this is from margin calls, where people who have levered themselves up, so they borrowed money from various counterparties in order to make more speculative bets on financial assets, have been having to unwind their positions recently. And this is through the margin call system, where effectively, if you have made such a bet, you're asked to post margin to keep that bet going effectively. So you need to raise cash from somewhere and give it to your counterparty to ensure and to assure them that you do in fact have the money to make good on your promises. And what this means is you need to draw and raise cash from other assets you have, and that means any other financial assets. So it could be stocks, could be bonds, could be gold, and it seems all three of these are being hit by this unwinding of leverage. Something else that is driving this leverage crisis is because due to a lot of regulation that was introduced after 2008, it constrains a lot of banks as to how much liquidity they can then provide other market participants, specifically through Dodd-Frank, which meant that banks need to hold much more in reserve rather than lend much more of it out. And what this means is that in a time of a lot of stress as we have right now, well, all of these market players are put under an awful lot of pressure to sell whatever they have in order to make margin calls and also just to unwind their own positions. And in that kind of environment, gold just becomes just one other item on the list that needs to get sold to raise money. So market participants are not after assets right now, they are needing currency. But if you are a gold investor, have no fear. For all the liquidity problems that are being experienced throughout the market are going to be remedied by central banks printing currency in order to maintain some kind of stability. So central banks are going to try and step in and provide the liquidity that the market is not being able to find at the moment. And what that means is effectively devaluing their own currency in order to create that stability. So this chart here is from Lynn Alden on Twitter. I'll link to her Twitter below, in fact, because it's a great source of information. But in this chart, she just reveals how while the beginning of recessions, at the very leading edge, gold normally loses value. When that liquidity is injected by central banks, gold actually outperforms stocks and goes to all-time highs very, very quickly. So what we may be looking at is the beginning of a next big bull run for gold. But that sums up today's Daily Blitz. Thank you very much for watching. Be sure to subscribe and click the notification bell down below, and we shall see you in the next one.